Thanks for joining All Worse Money Matters.
Hey, thanks for taking my call.
Hi, Jeff.
Hey, guys. I got a question about Roth conversions. So my wife and I recently met with an attorney and put together a trust. And from that, we got an hour of free time with one of their tax attorneys.
Tax attorney or tax attorney?
Estate planning tax attorney. Really looking at our estate from a tax perspective.
Was it helpful?
That was his specialty. Yes, mostly.
Okay.
But he went down one path that I didn't agree with.
Okay.
So I felt like I needed a second opinion. And it was all related to Roth conversions. So a little background, I am almost 63, probably will retire sometime between 67 and 70. Have about $1 million in a traditional, 401k and maybe $250 in Roth IRAs, maybe another 50 in, traditional IRA. So this tax planning attorney's primary goal, he said, as he writes on the whiteboard, is zero taxes in retirement. And I'm like, wow, that's a strong statement.
Wait, what scared me most is he did it on a whiteboard. So he was standing up in front of you, writing on a whiteboard? Okay, keep going.
Correct. And it became obviously more elaborate after that. So,
okay. That's a little off-putting.
It can be, yeah. He's standing and I'm sitting, etc. Right. So, in general, I felt like the conversations about getting more in Roth, not having taxes, et cetera, all made sense. And of course, he was talking about the end of 2025. I think the Tax Act's going to expire and our taxes should go up. And a lot of this is predicated on our taxes being higher in the future in general, right? So I felt like, hey, if I could afford to do a Roth conversion and I can pay for the tax impact out of cash or something I'm making very little money on, then it probably makes sense, even though I'm only 4 to 7 years from retirement.
But you're working now.
I am still working.
So let me ask.
Let me make a little higher level here. So if you were at this point, instead of having $1 million in a traditional 401k, the $1 million in a Roth, you would have more after-tax money in retirement, right? And to this person's point, you could have a lot of tax, not pay any taxes during retirement. The question is, would you have the $1 million in Roth? Because the only reason you would have that is if you paid those taxes along the way. And the tax money is going to come from somewhere. It would either mean a lower standard of living for yourself and your family, right? Because you couldn't have the money to spend, or you wouldn't have the dollar saved.
Yeah,
right? So,
correct. So let's boil this down.
A Roth is think of it no different than a prepaid tax liability.
That's all it is, right? And so what's your income right now? Are you married?
I am married.
Okay, and what's your income?
Bonuses and everything about 180 gross.
And does your spouse work outside of the home?
No.
Okay. And how much do you have in brokerage accounts and cash?
You mean non-IRA assets?
Yeah. Yes, please.
Not a lot, 40 or 50,000.
This is a very typical retirement profile here, right? Where you've got your largest nest egg is your 401k because it was your but the fact that you've got the 20% in Roth, I think it's a good position.
So let's just forget what he said. Let's just forget.
And do you have any pension?
No. Okay,
let's just forget you ever met this guy and ask the question. Right? Does it make sense to convert money into it? If I could just tell you off the surface, it's just crazy.
I certainly wouldn't do it.
It's just it's nuts. It makes no sense whatsoever.
Unless you think we're going to a flat tax and its tax rate's going to be higher.
Or even if tax rates went higher, you've got look. You said you're going to retire in 4 years, so he wants you to convert $1 million over 4 years. Right now, you're making 180.
No. Hang on. He wants me to convert it between 67 and 70 in thirds.
Okay.
So it takes me just up to whatever the next tax bracket is.
Yeah.
In those years, so my concern though is I don't have the cash to pay the
Oh,
taxes.
that's okay. That's you can use the rollover to actually do that. But I gotta tell you, I wouldn't even have had the conversation with you about what we were going to do in 4 years. I wouldn't have. I mean, why waste our breath? I would say we should consider in the day you retire, right? The following year, whenever you retire, that we should be doing some Roth conversions, right? And I would have left it at that. Would have left it at that. Wouldn't have said another word.
But isn't there so specifically though? If I take that money out and I pull 20% out or 22% or whatever to pay the tax, when I convert it, then it's growing. I've put less money in a Roth.
It's the same.
And it's growing. So isn't there a break-even point?
No, it's the same number, right? So let's say you have $100 and you're in a 20% marginal tax rate. Right.
Okay.
And I convert this $100 into a Roth and it doubles in 7 years. How much money do I have? I have $160, right? So I took this $100, I converted it to a Roth. So I used the Roth to pay the 20% tax. So now I have 80. It grows by 10% per year for 7 years. Now I have $160, right?
Okay.
It's simple math.
Correct.
Let's say that I have $100 and I don't convert it, and it grows by 10% for 7 years. Now I have $200 and I have 20% tax on it. I take the money out. I pay the tax. What do I have? I have $160.
Right. So if the tax rates are the same, it doesn't make any difference.
Push. It's a push.
But where there is opportunity and where I would agree with this individual you're speaking with, it's because our tax rates are not flat. They are progressive. So you can have, as a married couple, you could have over $100,000. Well, after your standard deduction, which is what, 25, you could have about $120,000 of gross income and be taxed in a 12% bracket. The next dollar above that goes to 22%. So even if we revert back, let's assume that Harris is the president, and the Congress lets the tax rates expire, and we revert back to what it was prior to the Trump tax. Now the 12% bracket goes to 15. And the 22 goes to 25. That 15 is still lower than the 25. So
but I don't know why he said 67 to 70. Why wouldn't he say 67 to 75? Because that's when your required minimum distribution kicks in. So in all this saying, if I was sitting in a room with you, I would have brushed over this as lightly as I possibly could.
Well, maybe I just focused on it because I wasn't able to do the math in my head, and it just didn't add up. I felt like I was getting less in the end, but your simple analysis of $100 makes sense.
And it's 4 years out, like.
Yeah, and
correct.
And then not only is it 4 years, you have 7 years to actually convert it before the required minimum distribution, and then it depends on what you're living on whether it makes sense to do that or not. So I wouldn't worry. I wouldn't spend another minute thinking about it.
No, that's fine. I mean, and I'm now doing Roth contributions because apparently my employer supports that. I didn't realize it, so sure, why not? And some things so I'm trying to reduce my tax liability.
If I were in your situation, I would take a pre-tax.
I would too,
because your taxable income is $180,000 today. Right? When you go into, or not your taxable, your gross income. When you go into retirement, you're not going to have $180,000 flowing through your tax return.
Yeah, right. I wouldn't do the Roth contribution. What's the state income tax at the state you're living in?
I'm in Ohio. I'm not sure. I'm not sure.
Yeah, I have no idea.
I don't know.
Yeah, I'm not sure. Sorry.
Well, I wouldn't. I agree with Scott. I wouldn't do the Roth contributions either.
So you think I should wait on conversion until retirement for anything, really?
100%.
Oh, conversion, but you said that you're actually making Roth you're making after-tax contributions to your 401k.
Right. Correct. So previous to all this, we've been maxing out our 401k and maxing our Roth accounts every year for X number of years.
I like that.
That's still happening. And then I just switched a couple of months ago to doing Roth contributions.
No, switch back.
401k.
Switch back.
You think so?
Yes.
Okay.
I
And
know
shouldn't-
so.
The IRA. I've
Well,
got the smaller one, I shouldn't convert that either?
Wait.
assuming that tax savings doesn't get spent somewhere else. Because to Pat's point earlier, right? Everything looked in a vacuum. I have this Roth, I convert it, pay the 20%. It looks at it by itself. But the reality is, but when you switched from pre-tax to Roth, your paycheck went down.
Correct.
Okay, so if you switch back and you get an extra $300 or whatever the amount is on your paycheck, and that gets spent, then at retirement you will actually have less after-tax spendable money than if you did the Roth.
Okay.
That's a lifestyle decision.
That's correct.
Yeah,
it sounds like you're fairly disciplined at this point. Kids are probably gone and on their own.
They're self-feeders.
Correct.
And you're right now really focused on making sure you're set up well for when you're retired.
Absolutely.
Yeah.
That's the plan today.
So yeah, switch back.
Okay.
Yeah, and by the way,
And save that extra dollar somewhere else.
you've got an incredible voice for radio. I mean, I just
I've been told that before. I did some.
He does, you're
volunteering
right.
for
Actually, he
the,
does.
for the Association for the Blind in the past and read books.
so
online.
wait. Oh, you did.
I did.
I'm
years
afraid.
ago,
So the only place you could make it in media was with blind, people.
yeah. Correct. Thanks for restating the obvious.
Thanks for calling, Jeff.
All right,
Appreciate
appreciate
it.
it, Jeff. Thanks.
Yeah.